Good morning. I have come with the module 13.3. So what I'm going to do in 13.3, you know that 13.3, the module is for deductions from gross total income. 13.1, I have explained section 80C. 13.2, I have explained donations. Donations, and I told you section 80C and 80G are very, very important sections. So this you can expect in the full problem also. When you will do, you will get questions based on 80C and 80G. Now I am coming with 13.3 and 13.4, 13.3 and 13.4. Those sections mostly are important for theoretical concepts, but some sections, section 80D, this is important for, that is health insurance premium. So most of the people will make health insurance premium contribution, and that will be important also for the problem, also for the theory also. So this is how I am telling you. So this is the importance, how you can learn, how you can learn the subject. So giving importance at each level, whether you have to give importance for problem, whether you have to give importance for theory. So this is what I am going to explain. And 13.3, this module I am going to explain 4 sections. So this section 80CCC, 80CCD, 80D and 80DDB. So these sections I am going to explain, and in this 80D is important for problems also. So 2 problems I am doing. So when I told you each section separately problems are not available. So one question will have deductions from 2-3 sections. So that is how I have included 2 questions from this module also. The previous module, the other 2 modules, I have included problems, and 80G, I have done enough problems, so it will be clear with you how you can do the problems. So please, happy learning. I'm wishing you happy learning, and I hope that all you are keeping safe and fine. And this we will explain with the help of PowerPoint presentation. So as I told you, deductions from gross total income, 4 sections: 80CCC, 80CCD, 80D and 80DD. So these are the 4 sections I am going to explain. So first section, contribution to pension fund, section 80CCC. See, you have to remember that this is allowed only to individuals. See, every section I will start like this, whoever it is available. So this, some sections we have seen that in capital gain also we have seen that it is available to everyone, individuals, HUF, company, association of persons, everyone. But this you have to remember that pension is available only, this deduction, it can be claimed only by individuals. And why there is a need for pension? See, you have to remember that in the case of government employees, they are the privileged ones. They will get the pension. But in 2004, what they made is government made a change. Government has whoever getting pension, even if you are in the government sector, they made it participatory pension. That meaning every month from the employee's salary, some amount will be contributed towards the pension fund. Some amount employer also will be contributing. So everybody will contribute. So in the before 2004 appointment, we don't have to contribute anything. Government will give the pension after our retirement. We have not contributed anything. But 2004 the scenario changed. That is why now people, they want to contribute, this meaning this they have to pay something, and employer also will be contributing. So there is a deduction available for that. So you have to remember that it's only available for individuals. This question is important from the theoretical concept. So this amount paid or deposited to LIC or any other insurer to effect a contract of annuity or pension out of fund set up under section 10, section 23 AAB. Section 20, you know that it's about exempted income. So any, usually insurance, life insurance companies giving the schemes for pension fund. Those who are in the private sector, or those who are not eligible to get pension, they can join this. So here this pension scheme is available for any insurance company, and mainly life insurance companies promoting this type of schemes. So the payment must be made out of income, whether of current year or past years chargeable to tax. This is the condition which you can see only in this section. See, I told you section 10 is talking about exempted incomes, agricultural income, dividend from companies, exempted commuted value of pension in the case of government employees, encashment of leave for at the time of retirement in the case of government employees, all this, gratuity for government employees, all these are exempted. So if you are making a contribution for pension fund from that exempted income, you will not get eligibility for this scheme, or you will not get any deduction for the contribution. So this is the only section you have to claim that you are making the deposit out of the taxable income. See, whatever if salary income I am getting, I can contribute for pension from my salary income. I can contribute this section, but not from the agricultural income. So if you are contributing to this pension fund for claiming 80CCC deduction, that income should be from your, that income you have to remember that that is your taxable income, not an exempted income. That is very important. Now, the rate of deduction is actual amount paid under the scheme, excluding interest or bonus accrued during the year. Because you know that LIC always interest will be, and interest and bonus will be accrued. It will be accumulated, and at the date of maturity you will get the full amount, or rupees 1,50,000, whichever is less. See, for example, I have contributed 1 lakh, and my comparison is between 1 lakh and 1,50,000, whichever is less. So in this case, if I am contributing 1 lakh, I will get only 1 lakh exemption. If I contribute 2 lakhs, comparison is between 2 lakhs and 1,50,000. Then in that case, my exemption limit is 1,50,000. Next is, if any amount is withdrawn from the scheme, it will be fully taxable in the year in which withdrawal is made. Please remember that if the LIC has designed the scheme for 10 years, you have to continue in that scheme for 10 years. In between, if you are making any withdrawal, it will be taxable. Now, contribution to pension scheme of next section, next deduction we are going, contribution to pension scheme of central government or of any other employer, 80CCD. So this is also related to pension, because everybody will be looking for a pension. Because if we are getting pension, we don't have to depend on our children for our old age. Just like salary, we are not getting the full salary, but 1/3 of the last drawn salary we are eligible to get as pension. That is a good thing. So benefit is available to central government employees employed on or after 1/1/2004 or non-government and self-employed employees. See, I told you, usually state government and central government employees, they will get pension. 2000, those who joined 2000, before 2004, they are eligible to get full pension. But if you are joined after 2004, it is participatory pension, where employee will be contributing certain amount, employer will be contributing certain amount. So this central government is now giving schemes. Whereas if you are in central government or state government, or if you are a self-employed person, or if you are in the private sector, you can join this scheme and you can claim this deduction also. So you will be entitled to get pension from a certain age. So that is the advantage. So this deduction is employees and employers' own contribution, because it's participatory pension, or 12% of salary, whichever is less. So this is section also is important from the theoretical aspect. So these points are important. So what is salary for computation of this section? Salary includes DA and salary plus DA. So that is the salary for computation of this scheme deduction. Now, maximum amount of deduction available under section 80CCC is rupees 1 lakh. So earlier section we have seen that amount contributed or 1,50,000, whichever is less. But here it is 1 lakh only is the deduction available. Now, going to the next section, this is very important, medical insurance premium, section 80D. This is important for theory and for problems also. So this is contribution towards health insurance. Now you know that most of the cases health insurance is needed, because hospitalization is a major expense for almost all the families. Any major diseases, cancer, organ replacement, or COVID, or any kidney dialysis, kidney problem, heart problem, major expenses, major operations, it's very expensive. So everybody will take health insurance now. So this, in our country also, people have started being aware of that hospital expenses. And if you have the good insurance cover, when you go to your hospital, you can enjoy the privileges also. Just like 5-star facilities also you can enjoy if you have good health insurance. So people are opting for this. Now this scheme is available to individuals and HUF. So here it is available to individuals and HUF. Earlier sections we have seen that only individuals. Now premium should be paid out of income chargeable to tax. So premium, you have to take that. See other section also, 80CCC I told you, income chargeable to tax is an important section. If you are depositing for 80D from exempted income, so then you will not be eligible to claim this exemption. Now actual premium must be paid through check. That is also important. See this, Check payment, if you are making cash payment, you are not eligible. Now, deduction allowed is actual premium paid for self, spouse and dependent children, or rupees 25,000, whichever is less. In the case of an individual, they can include the family. Family meaning children should be dependent, and when you're taking for individual, your spouse can also be included. The maximum for an individual can be claimed is 25,000. Now, he can include the parents also. I'm going to explain that. In the case of senior citizens and parents, limit is raised to 50,000. That meaning, if you are including your dependent parents also, the individual limit they can raise to 50,000. Now, preventive health checkup up to 5,000 is allowed. One important thing you have to remember, preventive health checkup. Most of the people will go for annual health checkup. Now, that is not necessary that you have to make the check payment. It can be made in the form of cash payment also. So, only preventive health checkup, you can make the cash payment. So, that is the next point I have explained. Health checkup payment can be made in cash or in any other mode of payment. Next is medical expenditure up to rupees 50,000 for treatment of a very senior person is also allowed. So, in the case of any senior person, parents above 80 years, so medical expenditure up to 50,000 can be claimed. Now, next section, maintenance including medical treatment of a dependent, that is person with disability. This also most of the SSS will claim this. 80, if you have any differently abled person or a special person in your house and who is dependent on you. So, section 80 double D, allowed to individuals and HUF. So, the last two sections what we are explaining in this module, it's allowed to individuals and HUF. Now, first deduction of 75,000 from the SSS is gross total income. In case of severe disability, the deduction is raised to rupees 1,25,000. Please remember that how you will decide between normal disability and severe disability. Some people you have seen that severe disability, they cannot live on their own without support from the family members, parents or anybody will be taking care of them. They will be walking in the, they cannot walk on their own. They will be supported with a wheelchair and all. So how they will know that this is a special case, severe disability? They have to get it approved from a government doctor. So if it is not severe disability, they can get a deduction, straight deduction of 75,000 from the gross total income. If it's a severe disability approved by a government doctor, then the deduction will be 1,25,000. This is also important for the problems also in the theory also. Now, two problems we are going to do. This will include deductions not only from this module, other modules also, 80C, 80G. So, that is how you will get the problems. So, this we'll do two problems. First one is Mr. R made the following insurance payments during the previous year 2019-20. Compute the eligible deductions under section 80C and 80D. So, this 80C deduction was in module 13.1. For this problem also we are including that. And 80D I told you, section health insurance is important for theory and problem. So, life insurance premium for own life 6,000 per annum. Health insurance premium paid to GIC for wife and children. Health insurance premium paid to GIC for wife and children. So, we have seen that 80D is possible for including spouse and the dependent children. If the child is working, then he is not eligible. That means he is not dependent. So, please remember that this is for dependent children. Now, accident insurance premium, it will not be covered in the 80D. It is not eligible. Next is health insurance premium paid for dependent mother by check. Parents can be included. Dependent parents can be included. This can be allowed and they will get a higher premium also, higher exemption also, 50,000. Medical insurance paid for own life by cash. We know that cash payment is not allowed. So, you have to disqualify this cash payment. Only preventive health checkup cash payment is allowed. Now, he paid Mediclaim policy for his 70-year-old father. So, that also can be allowed. Parents, 50,000 exemption he can claim. Now, he had spent rupees 4,000 for medical checkup of his father. That can be allowed. Even if he is making a cash payment, it can be allowed. Now, the solution, table showing the computation of eligible deductions under section 80C and 80D. See, 80C, you know that different items we have learned. What all are eligible? Then we will take a qualifying amount of 1,50,000. So, deduction under section 80C. LIC premium for own life. So, he has made a contribution of 6,000 that can be allowed. Now, up to 1,50,000 can be claimed. Now, so 80C deduction is the 6,000 rupees we can claim. Now, GIC health insurance premium for wife and children, 25,000. 25,000. So, this GIC health insurance premium for wife and children restricted to 25,000. He has made a contribution of 20,000 that can be allowed. So 20,000 under section 80D can be allowed. Now accident insurance premium is not eligible as 80D deduction is only for health insurance. I told you that accident insurance premium is not eligible. Mediclaim policy for dependent mother. You have to see that what all, see that individual he has contributed 20,000. Now parents he can bring up to 50,000. So all these items we will include in the inner column and the final amount we will restrict and take it to 50,000. So Mediclaim for dependent mother 20,000 is allowed. He paid by check. Medical insurance for father 28,000 allowed. Health checkup paid to father by cash, that is also allowed. Because preventive health checkup, the mode of payment can be cash. Everything else it should be check payment. So here you have to remember total amount he has paid for parents is coming to 52,000. But the limit is only 50,000. So the total deduction under section 80D is 70,000. So GIC premium for own life as cash payment is not allowed. So 76,000. Under section 80C he can claim 6,000 and under 80D he can claim 70,000. Now the second problem, Mr. A received the following incomes during the previous year 2019-20. Compute his taxable income for the assessment year 2021. So first one is insurance commission received from LIC. So this is important, you have to remember 10,656. We will come across LIC agents. See in this case 1993 budget, central government when they passed the budget they made a provision for LIC agents. 1/3 of the commission received they can claim as an exempt, they can claim as a deduction. Ad hoc commission we call. Now why there was a need for allowing this in the 1993 budget? Because most of the LIC agents you have seen that they don't have any other income. See LIC advertisements also you can see that now. If you don't have any income, if you are a housewife and all, you can work as LIC agents. The amount of business they will give, that will be their commission. So most of them, they don't have any other source of income. But they are doing is spending a lot for traveling, meeting the clients, making phone calls, following up. All these expenses are there. They are not getting any other deduction. They are not eligible for any other deduction. See if it's coming in salary, house property, business, capital gain, income from other sources, some deductions are possible. So this LIC commission, that is why 1993 budget is approved. If their salary is up to 60,000, if their income from insurance is up to 60,000, and if they are not maintaining proper books of accounts. I told you if a housewife, if they don't have accounting background, if you tell them to keep the books of accounts, cash basis, they will not have any books of accounts. They don't know what is debit and credit. So that is why if the commission is not exceeding 60,000 and if they are not maintaining proper books of accounts, they can claim 1/3% of the commission they received as ad hoc commission. So I have included in the solution. So this is the background I want to explain. So LIC commission, if it's up to 60,000, you have to provide this commission. So clothes business profits, it's coming under business income. National Savings Scheme deposits, it's coming for ATC, 10,000. Jeevan Dara policy payments, ATC, 500 per month. Investments in units of mutual fund notified under section ATC, linked to equity linked saving schemes. This is also ATC deduction. Donation to National Children Welfare Fund, it is ATG deduction. Now, donation to Prime Minister's National Relief Fund 5,000, ATG. Gujarat Earthquake Relief Fund 2,000, ATG. PM Folk Arts Fund 1,000, ATG. PM Students Aid Fund 2,000. Maharashtra Chief Minister's Earthquake Relief Fund. You have to remember three types. 2,000. Maharashtra, Jammu and Kashmir and Karnataka. It's coming under without limit and it's 100%. These three states you have to remember. Now local authority to promote family planning. If family planning value is there, computation is different for ATG. This is with limit and 100%. Approved public charitable trust, it's 50%. If it's charitable trust with limit 50%. If it's approved eminent educational institution without limit 100%. Remember this, these two items, it will keep repeating in the questions. National Fund for Control of Drug Abuse, it's 100%. I told you three things recently added to ATG. One is Clean Ganga project, Swachh Bharat and control against drug abuse. All this without limit 100%. He paid by check to Mediclaim policy of GIC. So he is eligible to get, he can claim up to 25,000 under section 80D. Compute his taxable income for the assessment year 2021. So here we will use 80C, 80D and 80G. Now table showing the deductions under section 80C and 80D. So 80C and 80D we are doing. Deposit in National Savings Scheme 1992 80C 10,000. Jeevandhara policy 500 per month into 12 it's 6,000. Equity linked savings scheme investments notified under section 80C 10,000. Qualifying amount is 26,000. We can allow the full value because qualifying amount can go up to 1,50,000. So he is eligible to claim 26,000. Now Mediclaim payment by check is eligible for 80D deduction 6,000. Now computation of 80G we have to show. We have to show, then only the last computation is 80 total taxable income. So 80G you have to remember, with limit amounts are there, without limit amounts are there. So National Children Welfare Fund it's 100%, 2,500. Prime Minister's National Relief Fund 100%, its value is 5,000. Gujarat Earthquake Relief Fund 100%, value is 2,000. Maharashtra Chief Minister's Earthquake Relief Fund 100%, value is 2,000. National Fund for Control of Drug Abuse, it's 100%, 4,000. So total without limit donations is 15,500. Now with limit donation we will see. With limit donations. Donation to promote family planning, you know that is 100%, value is 2,000. Calculation will change. And usually all 80G problems, the family planning value will be there. Now approved charitable trust, you have to remember that it's only 50% and it's with limit. Eminent educational institutions without limit 100%. See, charitable institution value is 10,000. Students aid fund with limit, it's these two values are not there in the table what I have given in the 80G. Please remember students aid fund. It is with limit and that limit is only 50%. PM Fox Art Fund 50%. Values are 2,000 and 1,000. Total with limit donation is 15,000. Now the steps for computation, 4 steps are there. Calculation of adjusted GTI. So you have to remember GTI minus LTCG minus STCG if they are paying securities transaction tax. Minus deductions under section 80C to 80U excluding 80G. So you have to remember that LTCG and STCG is not there. But 2 deductions are there, 80C and 80D. 26,000 and 6,000. I got the gross total income. That value you will get in the next slide. Because, so 2,82,104 minus this 80C and 80D deduction, 26,000 and 6,000, you will get 2,50,104. Now step 2, identify the deductions having without limit and with limit donations. That we already calculated in the previous slide. Without limit is 15,500, with limit is 15,000. Now step 3, determination of the qualifying amount. That you know that 10% of the adjusted GTI or total of with limit deductions whichever is less. See, your adjusted GTI is 2,50,104. 10% of that is 25,010. Or with limit donation total is 15,000 whichever is less. So the comparison is between 25,010 and 15,000. So you will take 15,000. Now table showing 80G deduction. Without limit 15,500 fully they will get. Now with limit donation your qualifying amount is 15,000. In that family planning 2,000 fully you have to give. So 15,000 minus 2,000. So you are getting 13,000. All other items you are eligible for only 50% deduction. So 13,000 divided by 2, 6,500. So 2,000 plus 6,500, 8,500. So total 80G deduction is 24,000. Now table showing the computation of taxable income of Mr. A for the assessment year 2021. Profit from cloth business 2,75,000. Income from other sources. LIC commission will come in, income from other sources. 10,656. Ad hoc commission, I explained that 1993 budget, if the commission amount is not exceeding 60,000 and if they are not maintaining the books of accounts on cash basis. So 1/3 deduction they will get 3,552. So the taxable amount is 7,104. Gross total income 2,75,000 plus 7,104. Now less deduction under section 80C 26,000 we have already calculated. 80D 6,000, 80G 24,000. So total of all the deductions, it's 56,000. You will deduct 2,82,104 minus 56,000. Taxable income is 2,26,104. So this is the module I want to explain in section 13.3. So this we have explained the sections. Now the important sections only we are covering, whatever is included in your syllabus. So one more section is there, one more module is there, 13.4. So that I am going to explain in the next module. Some more sections, and most of the sections are important from theoretical aspect only. But there also I have included 2 problems, making a mixture of all the sections. So that will be easy for you to learn. So that is the idea. And please remember to subscribe to my channel, Ace Commerce with Dr. Alice Mani. I have included the complete syllabus of income tax. So it will be easy for you to learn that, and give me a feedback, and that I'll be grateful to you for giving me feedback. That will make me a better teacher. And you will also get more experience and more knowledge when I'm sharing the other subjects also. Thank you for watching.